We're going to segue now into what's making news in the world of business. For that, we're joined by Jameel Ahmad, who's a chief analyst at GTC. Jameel, the US Federal Reserve cut its key lending rate by 0.5 percentage point on Wednesday. How are markets reacting to that?
Markets are surprised because the Fed definitely went bigger than expected. We only had up until this week that we saw it as like a coin toss, whether the US Central Bank would go by 0.25% or 0.5%. And actually the Fed went for the latter, which was a much more aggressive move than I think everybody expected. But financial markets generally cheer lower interest rates. I think they're just a little bit surprised at this point that the Fed chose to show such a forward-thinking and aggressive move. And that was the main message from the Fed statement as well. They were forward-thinking. They were trying to show control that if US economic data does decline, and we are starting to see some signs of this, that the US Central Bank wants to get ahead of the curve and show that it will do what is needed to support economic growth. And financial markets are now already expecting that between now and the end of 2024, that there might be even a further US interest rate cut up to another 0.5%, which will provide even more stimulus and support to US economy. But generally, yes, there is some surprise that the Fed went more aggressive than we thought they would.
And Jameel, meanwhile, gold prices have surged to an all-time high. Tell us about that.
Ceilings are there to be broken, and after pushing to that 2,600 US dollar level since the end of last week, gold prices did briefly touch 2,600 following the US Central Bank decision. Again, like global markets historically have enjoyed the news of lower interest rates, precious metals such as gold have historically enjoyed as well the hype and beaten the drum to lower interest rate talk as well. Gold prices are up by more than 25% this year. Institutions are expecting that 2,700, even up to 3,000 US dollars next year is possible. I would say let's be a little bit more caution than that. But generally speaking, gold prices are now at 2,600. I do expect that we're going to see a little bit of profit taking over the near term, but many are still optimistic over what gold will have and what it will enjoy over the future, mainly because of the lower interest rate narrative and talk that world central banks are still suggesting.
All right, and what else are traders keeping an eye on for the rest of the week?
The themes will still very much remain on the central bank, and the attention now shifts to the central banks of the United Kingdom, which is the Bank of England, and followed by, lastly, tomorrow, the Bank of Japan. Starting with the Bank of England, we're not expecting the UK Central Bank to cut UK interest rates today, but to set the tone that they will cut for the second time this year over the final quarter of 2024. That's because the inflation reading is now steady around 2.2%, which is trending just above the central bank target, but to provide some confidence that they can cut interest rates. But we might be saving the best till last, because while the likes of the European Central Bank, the US Federal Reserve, and the Bank of England are all cutting interest rates in 2024, the Bank of Japan are pushing the needle in the other direction. And already over the past couple of weeks and months, we've seen the dollar yen, which is the USD JPY, the Japanese yen, strengthen all the way from 160 to 140. And if the Bank of Japan do move again as early as tomorrow, or to signal they will increase interest rates while everybody else is cutting them, we see further scope that the Japanese yen will remain the currency to watch over the final quarter of this year.
Okay, Jameel, thank you very much for that business update. That's Jameel Ahmad from GTC. It's time now for